There's the silver 3 month, right? That's your favorite chart. Tell me about this chart, Jordan.
Okay, so this is the quarterly silver chart, and we're not showing the 1980s. We've already closed above the quarterly high, all-time high in 79 or 80. We've already last quarter we closed above that, so we've taken out that resistance. The end of the quarter is at the end of June, so the next time we do this will be very interesting because the
Yeah.
all-time quarterly futures high close in silver, I believe, is $37.60. Now, the second, third, fourth highest close, you can see they're in 2011, 2012. They're like in the 34, 33. They've kind of clustered there. So here's the rub. If silver can close this month above 35, even if it's 35.02 or 35.03, that will be the second highest quarterly close ever. And you can
Yeah,
see where we are right now, that the horizontal thin line there, I think that's the last trade in the
yeah.
market. And you can see how that lines up with the resistance there, those levels in 2011 or 2012. So, Professor, this is going to get really interesting in 4 weeks from today if we're talking and silver has a 35 handle. And
Yeah.
we've talked about weekly and monthly how significant 35 is. So this quarterly close, this is an important tell for the market to see if
Okay.
I mean, can these guys knock this thing back below 35, or are we
Let's
going to see it blow through?
Well, I don't know what the answer to that is, but I want to just bring up a situation that we were in almost 2 years ago, maybe 2 years ago. And that conversation was you saying, "Oh, it's the end of the month. We got a monthly close. It's going to be a good close." And we're talking about gold. And we're like, "Oh, it's the end of the week." It was like we had a good. It was a Friday, like end of the week, end of the month, end of the quarter. And you went, "Oh, look, this is a quarterly high. This is a quarterly all-time high for gold." And we looked at each other and said, macro discretionary is definitely buying next week. And they bought like crazy. So I want to reiterate what macro discretionary looks at, because what you're saying, look, if you're a macro discretionary fund, you trade everything on earth. You have a lot of money, you trade everything on earth, and you trade what's moving, and you have a screen, and the screen has everything on earth on it, and you say, and you have things that you trade all the time, bonds, stocks, whatever. And then you say, set an alert. Did anything make a new monthly high? Because then they're going to look at it and maybe trade it. When something makes a new quarterly high, someone will say, yeah, we got a new quarterly high in something for the last 2 years. Oh, really? I'll take a look at it. When your alarm goes off and says new quarterly high, second all-time highest quarterly high in silver, they're in the market the next day. It's on their screen and they're saying, all right, how do we get in? When do we get in? This is what happened in gold. It's happening in silver. It's happening. It's going to happen in silver as you're describing, as I'm describing, if we get a quarterly close over $35. So we're having a deja vu moment because I said this about gold. Well, I'm sorry, we said this about gold when we had this situation back then. So quarterly close is probably the holy grail for a macro discretionary. An annual close would be the best. Like quarterly, that's also an annual. Okay, well, we'll have to wait 6 months for that. But an annual close, highest all-time annual close in gold, well, that means they're going to trade it because they have to trade it because everyone's looking at it. So I think looking at this and listening to you, even though I'm saying to you that the market is damaged, the COMEX, not the market, the venue is damaged. COMEX is in trouble. They're going to buy it. They may not buy it on COMEX. They may buy it in China, but they're going to buy it, Jordan. They're going to buy it. That's like the headline is basically 35 gets you, I don't know what the headline is, but it has a quarterly close over 35, and it's going to be lights out for anyone who's not fucking in this market. That's what I think. So I agree. I mean, we had this conversation about gold a year ago, Jordan, like 18 months, 14 months ago. So we're having the conversation again, and now it's about silver. It might be silver's turn. That's where we are now. All right. So I brought a couple of charts for me because we were talking about this beforehand. But There's Silver Daily, right? So Silver Daily is it looks like a breakout when you look at this narrow time frame. And in fact, this is what it looks like to me. It's like a conga line that got broken, and the consolidation below 35, is the only thing that's left. The consolidation is broken. But now we get to your point about has silver broken out yet? And you had said to me, no, it's not. And so there's the three rectangles. There's the weekly chart. We've got a high in November of 24. We've got a high in March of 25. And now we're touching up against that same high in the 35 area. To your point, all this work underneath 35, all these times that the market has been rejected. I don't know that can be rejected anymore. But that then we get to the main event here. Silver, there's silver juniors, right? That's your silver juniors chart. Does that
Yes.
show up?
The
Yeah.
SILJ ETF. Yes, I see
Yeah,
that.
yeah. Yeah. It's funny because I was in a chat with my subscribers the other day, and someone asked me the question that you're answering implicitly. And like, for example, the rally in silver the last 2 days, that was short covering. That wasn't fresh money coming into silver. Okay, I'm sure there was some fresh money coming in, but it was short covering because all the CTAs going back since the beginning of time have been selling silver and buying gold because they wanted to own precious. And then they've been selling silver and buying copper because they wanted to own industrial. And silver just sits in the middle there, kind of like an unloved stepchild with these CTAs. But they're morons genetically. I mean, they're disciplined is what I mean. They hedge their risk. And so when silver cracked, whatever it cracked, for whatever reason, they all covered, like the wildebeest or herding, pack animals that they are. And the reason, this is what I had said to my subscribers. And they were like, what about miners? And right away I knew the answer. I'm like, the miners are not shorts covering. There's fresh interest, and the miners have been doing better. Like, it was only one day where silver spiked compared to the miners. The silver miners, and I don't have a lot of exposure in that, have been outperforming silver even while silver was in that stupid little conga line. Should I put that chart up? That's something we were talking about, right?
Yeah, yeah, go ahead. Yeah, go ahead.
There it is. So I don't know if everyone could see this, but that this is Jordan. This is to Jordan's point. The burgundy line is silver. The blue line is the silver junior miners, and that's going back since like November of last year. So what am I looking at here? No. I'm putting them separately. I'm putting them separately. All right. So the burgundy line is silver, and the blue line is the silver juniors. It's not a division. It's a separate market. So
Okay,
I'm showing
okay.
them as separate markets. Yeah, yeah.
Well, if we can see if we actually go back, this is very good because you can see the beginning of the year. But if you look at what happened after the mini stock market crash in April, you can see how the before April, from January to April or January through March, we can see that the silver juniors, the blue line, was behind the burgundy the whole time. But since then, what's happened? Now the blue line, not the entire time, but we're seeing several instances where it's running ahead of silver, the red line, and in the last 3 days or so, way ahead. Even before we had the big pop on Monday, look at the blue line last week, just surging above the red line. Yeah, right
Right.
there.
In fact, that's a good point. Here. What are we looking at over here? Between here and here, this is what I see. I see the blue line and the red line tracking each other, but the blue line is more volatile, right? So it's like, silver goes up a little, it goes up a lot. Silver goes up a little, it goes up a lot. And then silver obviously goes up a little, goes up some, and it goes up a lot. And then silver drops a lot and it, dives out of an airplane, right? Okay. But then the behavior changes when the market resettles here, meaning silver goes up a lot and the juniors don't really move. But then silver drops and the juniors stay in a range. So then the market was very wide in volatility and it gets narrower and narrower. So it's like completely unrelated markets, very volatile. Something snaps here and the market starts to get tighter, right? The blue line starts to track the red line. And now the blue line, like you said here, overtakes it. And as silver's doing this, The miners are doing that, and that's fresh money. That's the money that we're looking at here. That's like the miners are leading now. This is the whole American investor psyche is changing. Now, they're going to go back into the Magnificent Seven. It's going to be a story that won't die because all the banks are long it. But the miners are what's happening now. It really is it. That's it. So I see. I mean, this is crazy. This is crazy, right? Even like, look at this. When silver went up that much, the miners went up, looks like about 150% of the move, right? Okay. So now you have silver going up a massive move, but the miners are going up. Here we go. Here we go. Silver goes up from 8% to 13%. Put a number on it. So let's call that 5%. During that same time frame, the miners go up 13%, up 20%. So it's 5% in silver equals 8% in the miners. That's crazy. I mean, it's not crazy. It's normal. People have forgotten what normal is. It's a it's a good market.